Hello, good evening, everyone. It's me, Calvin from Round and Search, and you can see it's a beautiful beach over here. And thanks for joining into our Sunday Market Prep. So, the end of the day of the holidays, which you can see it. Okay, so tomorrow we will be starting a new day for trading in KLSE, and last week wasn't that great. You can see the KLSE is down to 1382, which a lot of people always say like, oh, okay, is testing the market at 1382. I myself, I don't really look into the psychological level, which I find it is psychological level is only like not the big boys who are following it, because if let's say the big boys want to sell the price down lower, they won't purposely sell it. Oh, the price hit below market actually goes below 1400, then they start to sell. If they want to sell, they have already sold so in the before that. So that's why I find that market is not that use the psychological level. So I don't know who came out with the psychological level, but I find it is not really working if you're following the psychological level. It's just like how you find the support line and also the resistance line. Okay, so okay, so testing everything great, right? So of course, today we're gonna see what are we going to have the next trading days. So in the next trading days, what we see from here is the majority of those top active lists are those bigger cap stocks. Indeed, yes, because those that is at the lower cap, lower pricing stocks, you have to be slightly careful, because some of it, they don't show any sign of rebound or demand are coming in, even though the prices continue goes down lower and lower. So one thing is because they might see there's no point for them to support it right now. Okay, so they might continue to go down gradually. And of course, some of the stocks, some of these penny stocks, which a lot of retail investors like to look into it, you have to be extra careful about it, because that's the end of them pushing the price up higher. So they might attract the buyers, and then what they'll do is that along the way, I'm not saying about this, but I'm just need the chart, something like this. Okay, so along the way, they will mark the price up higher and then throw it down, mark it up slightly higher and throw it down gradually. So you have to be a bit careful about the market into this kind of smaller stocks. Okay, and of course those like bigger cap one, then that is what we should focus on the next coming weeks. Okay, so this one still have selling pressure coming in, so it will continue to go down lower. Those that in bigger caps, let's say we look into FBM KLCI, first we look into those that is going down first, because those that goes down actually weigh a lot in the market, especially like for these stocks, high volume, price down in the daily charts. So it seems very bearish. A lot of people feel fear and panic about it. And if you look into 5-minute charts, let's see where the volume actually comes in. Mainly are coming in, throwing down the price. Okay, so seems like they will continue to have the price down. A bit of price down is continuation, so I have to be a bit more careful. And let's see about this one, which is the most heavyweight in the component stocks. High volume as well, price down. So why am I looking into 5-minute charts? Is because I want to see where does this majority of the volume coming from. So I don't want to just base on the price down in the daily chart with high volume, then I say it's bearish. Because sometimes the price can be going down, but there's not much of volume. The majority of the volume are trigger at the bottom, forming the bottom. So that's how we find a very precise bottom. And if you want to know more about how we find a precise bottom, remember to join our next webinar, which is tomorrow at 8:30. I'll be sharing with you guys on how to look into some of the rebound in this kind of market. So this one wise, no high volume price up so far. They are maintaining sideways, so it's not that great. They might have a slight price up, but overall it's continue to go down lower. Okay, so what I mean with the high volume, so you can see volume down with price down with volume. And if you look at the 5-minute charts, majority of the volume is actually coming from the bottom. At the bottom, it's not coming from when the price is throwing down. So that actually tells us that it's not selling pressure. It's mainly that people are supporting, the demand are coming in. So if let's say the price is down with a high volume, but if it's selling pressure, why the price don't go down lower? So you have to ask these kind of questions when you analyze the market. So it's not just about like looking into the chart pattern or looking into the daily charts and then find the resistance breakout, all those. So it doesn't work anymore because it doesn't make sense. The sense of it is that we don't sell at the same point. The traditional technical analysis always tell us that, okay, you, me, I, everyone sell at the same point when the price is moving up, okay, or going down. We think that this is a fair price. But most of us, we don't do that, because if you understand retail investor or you understand yourself very much, you know that when the price is moving up like this, you will continue to hold. You won't take the profit most of the time. So you won't sell at that point. So who is the one that is selling? The big boys. So the big boys are selling. So if let's say the big boys are selling, they can sell the price down, they can mark the price up higher. So when they are selling, right? So lesser shares in hand. So do you think that if they break this resistance means that they have the intention to mark the price up higher? Not necessary. Or even one of the very worst case that a lot of retail investors always think is that, oh, when they invest in the market, they always think, oh, previously the price has moved up to 7, let's say in this case it's 7 ringgit and 30 cents or 7 ringgit and 40 over cents. So right now the price is at 4 ringgit and 18 cents. They always have that kind of mindset that the price will move back up to 7 ringgit. So that's why they enter into this. They apply the valuation, how to measure the valuation and expectation of the price in the stock market, just like how they measure it in property. Property in those like really good area, okay? Not the kampung area, okay? So in property price valuation per square feet, if let's say 700 ringgit or 800 ringgit, then we'll always, it's about that. So along the way, when the time goes by, then the price will increase and increase. But that is only applying to the property market, but it doesn't apply into the stock market. Why? Because the stock market, you can change up and down, because that is based on the public, so-called public price. What is the expectation, or what are the institutional investor expectation? So if let's say they are at this point over here, they find that right now they want to mark the price up higher, they have distributed majority of the shares, then they will let the price up. There won't be any big boys in. Wait until later on the institutional fund comes in again, the big boys comes in again, then they mark the price up higher again. Maybe it might not go up to 7 ringgit plus. It will continue mark down lower and lower and lower. So that's why you cannot apply this same method into the stock market. A lot of people, so maybe some presenter or maybe the gurus will tell you like, oh, look at this, the price had previously hit 7 ringgit and 40 cents. So there must be a lot of people are trapped at this high side. So they need to mark the price up higher at this point in order for them to take profit. Okay, that is a very wrong idea. Why? Because the big boys, they don't take profit at one price. The big boys have already taken a profit on the way up. So how they take profit? You can see all this price retrace over here is telling us that they are taking profit. They mark the price up higher, attract the retailers to come in. Retail investor won't buy at the high side. They park their price at the lower point. So that's where the big boys sell it down to them. And when they see there's not enough of buyers in the market to buy their shares, for them to sell their shares, they mark the price up higher, repeat the same thing, attract the retail investor come in, create that kind of fear of missing out. They park at the lower point, they sell it down to the retail investor, and retail investor thought like, wow, look at this, I'm so good about my expecting the valuation, so I can buy at a lower price. So when they sell and sell and sell and sell and sell, when they have not much of shares in hand, that's where they slowly throw the price down lower. So that is how the big boys work. So you cannot use that kind of mentality or that kind of, I don't know where you got this kind of way to measure the valuation of the stocks by thinking that at the high side there's a lot of investor trapped here, so they need to move the price up higher, or a lot of institutional funds are trapped here. No, okay. Volume can be created by buying and selling, buying and selling, buying and selling from the left hand to right hand. So high volume doesn't mean that there's a lot of people buying at high side. It can be a lot of people are changing hand at the high side to create a kind of, wow, there's a lot of buyers coming in. If you look back into those stocks that you have entered before, you'll find that at the high side, when you enter into it, you find there's a lot of buying transaction. Why is that happening? Is because they want to attract your attention. They want to give you that kind of confidence, thinking that, oh, the stock, there's a lot of buyers are coming in, so you need to look into it. You need to, if you don't go in right now, then you miss the boat. That kind of fear of missing out. So you will queue at slightly higher price to wait for someone to throw it down to you. Okay, so that is the case. So that's why I say, like, don't expect the previous high price is where it should be a benchmark for the price to move back up higher. Okay, so that's what you need to understand about. All right, so overall, bigger cap stocks, I think from what I see is that those that has a high volume that is supporting the price, you can have a look into it. Okay, not this one. Those glove that I mentioned previously, doesn't seem like they have any intention to continue mark the price up higher. So you have to be extra careful with those. Okay, there's some selling going on, taking some profit. So try to avoid those. Banking wise, all those it's not really showing any sign of it. I won't say it's like a sector, but it's stock, individual stock. The movement of it will be based on the individual themselves. So it's not about the sector run for probably in the upcoming weeks. So you need to gauge and find the correct one by knowing how to find those that has a rebound. Okay, so if let's say you do not know how to find this kind of rebound, knowing where is the big boys is going to have a rebound, when are they going to mark the price up higher, when are they going to throw the price down lower, do look into our webinar tomorrow on the precise rebound analysis, where we look into 5-minute charts. How do we identify that? We don't use any support line into that because support line doesn't work. So you can have you can learn more precise understanding the 5-minute charts, how this price and volume actually works, which traditional technical analysis or any courses out there, they don't share this, because traditional technical analysis, they only teach you, they only know how to look into the chart or the candlestick, the actual candlestick. But when you ask them to look into this kind of 5-minute charts candlestick where this dash over here, they don't know how to analyze it. Okay, so that's why they don't look into it. And that is why a lot of retail investors in the market, when they start to see high volume, price down, they think it's bearish. But in fact, it is not that bearish. If let's say you know that majority of the volume is not created when they are selling the price down, right? So that's why you need to know this. You can see the price is down, volume is not high. When is it high? At the bottom. Okay, so we know that. You can see next day the price rebound up higher. So that is how we look into the market. It's that simple, by knowing the price and volume of it. Okay, so in the upcoming weeks, I think maybe end of the weeks, you'll start to see some small penny stocks start to have a rebound coming in. And then maybe for the early of the weeks, then you can look into some of the big cap stocks if you want to do some tradings. Same thing in the current market, short-term trades or maybe day trade will be a much lower risk trading method in the market right now, for what I think. Why? Because whatever you enter into it right now, then you exit tomorrow, what is happening, or in the afternoon what is happening, is none of your business, because you have taken a profit, or maybe you have already exited for that stocks that you have. So if it goes down lower, you're safe. So that's why I find this way is much more lower risk. Okay, I'm not saying long term or mid term is higher risk, but it's just not to apply in the current market situation. We need to know what kind of market cycle apply what kind of trading method into it. Then we can lower our risk from that. Then of course, other ways to lower the risk, it can go by position sizing and also other risk management, which we will share with you in our training course. Okay, so that's about it here for today. I hope you guys, this session will be able to help every one of you. So remember to give us a like and also subscribe to our YouTube channel, so you get notified every Sunday when we have this session going live. All right, so thank you very much. I'll see you guys again. Remember, give us a like on this. Okay, thank you. Bye bye.
Wrong and search. true traders react to the market.